Okay, folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and where have I been? Why didn't I do swing trading today last week? I had LASIK, and I was a bit overly optimistic, which is a hallmark of a trader. We are usually very optimistic, and I had expected to be right back at my computer right after the surgery because all the YouTube videos I watched for the most part, were very optimistic with people saying they could see crisply immediately following, well, the next day, I should say, the next day after the surgery. And given the the very, very poor eyesight that I had, apparently it's going to take a good deal amount of time for me to get back up to 100%. Right now I'm at about 70% and very close to 100% with reading glasses when I'm looking at the computer. So that's my tale of woe. That's where I've been. We will begin swing trading today, back up this coming week. So make sure you subscribe to my channel, enter your email address on the website. Don't miss any of those commentaries. So what we're going to talk about today are the headlines that are going to move the market. And I am confident that the futures are going to spike this evening when the futures markets do open up. We're going to also talk about how our month and quarter were. I guess we'll start off with that. And then we'll leave off with the stocks that we're watching for the new trading week. So let's get to it. So we went into the quarter very, very long of NUGT, which is the leveraged ETF, putting you long of the gold mining stocks. And we were up on the month nearly 61%. So a really great month. We had a massive breakout. I do believe that we are going higher longer term, short term. I do have a bit of concern with regard to the possibility of a very short term pullback on the NUGT on gold. But longer term, I remain extremely bullish. We have a breakout on a monthly basis. I fully expect to see a continuation move higher. Now, on a quarterly basis, we were up nearly 39%. We were buying it down here when nobody else wanted it. And when people would ask me, why are you so bullish on gold and silver? All I would respond was, I have 22 trillion reasons and rising as to why I like silver and gold. And I don't like it for the short term. I want it for the longer term. These are core positions that we plan on continuing to add to. But I believe that next week we may just get a pullback on these names, meaning silver, gold. Now, our position in silver is the USLV. We haven't broken out yet, but I think that we are very, very close to breaking out on silver. This is, if I didn't mention it, a quarterly chart. So here is our upper band of resistance. We put in a low at 55.31 back in Q4 2018. We rallied, pulled back. Now we have a retest of that support level. That support level held. Even though we undercut the prior low, we did rally to close back, to close positive on the quarter by just 0.2%. But when you drill down to a quarterly view, we were up over 14.5% on this position in the month of June. Again, here is our low, November of 2018. That was Q4 of 2018. Rally, pullback, retest, and we have now broken out on a monthly basis. So again, short term, I'm a bit concerned. Longer term, I think that we are going a lot higher on silver, gold, the miners. You have to be long. Now, are these the only trades that we had for the quarter, for the month? No, we had a whole bunch of oversold, extreme oversold swing trades to the long side, which we booked profits on. And we were just looking for singles and doubles. Singles and doubles. The market was volatile. It gave us the opportunity to get in and get out, book profits quickly. Now that we're beginning to see the momentum trade come back into favor, we will now be looking to trade momentum and continuation breakouts to the long side. Now, what makes me so confident that we're going to get that? All you need to do is to take a look at the S&P 500 quarterly and monthly basis. I went over this with members yesterday on the week ahead commentary, where I do an analysis of the overall markets, the sectors that look hot and the sectors that are not. So we have a strategy going into the new quarter of what we want to buy, what we want to add more of. We'll talk about a few of those positions, but if you're not currently a member, sign up for the 14-day free trial offer and get a glimpse of what our strategy is for this new month and quarter. Now, why am I confident that this market is going to continue higher? I'll give you a couple of headlines because it was perfectly orchestrated this weekend how they were going to spike the market higher. Fresh off the press from yesterday, ceasefire, U.S.-China trade talks back on track after Trump folds on Yahweh. All right, so he didn't fold. He's negotiating, all right? They're agreeing to buy farm equipment, farm products, whatever. That's his base. That's his core constituency. Now, what the markets are going to do tomorrow is that they are going to, actually I should say tonight, they are going to spike higher. Why? It's because the financial news media is going to take this and they are going to run with it. They're going to make it sound as if we have a trade deal. It's in the books. The trade war is over. Buy stocks, get excited, and then all of a sudden you're going to see a dump like you've never seen before. Don't get lured in. I do believe that we are going to break out on a monthly and on a quarterly basis. They will use headlines such as this to spike the market higher. They'll also use feel-goody headlines such as President Trump being the first U.S. president to visit North Korea. Everybody feels good. Everybody gets excited. They take their credit cards out. They go out spending. They buy stocks, usually on margin. And we're all good with that. We understand the psychology of the markets, and we are prepared to profit from it. So what were we doing last week? We were buying the banks. We'll go to a chart of the banks in a moment. Now, what should you be worried about? Can you believe this guy? Can you really? Guru. I can't believe that this is my competition. Incredible. This guy spends more on marketing in a day than I do in a month. Or a year, probably. It's incredible. It's like a puppy mill for new traders. Anyway, I digress. So what are we concerned about here besides the 22 trillion reasons and rising of as to why this economy is screwed 6 ways from Sunday? At current, we have the second highest number of S&P 500 companies issuing negative guidance on record. And here's the chart. The last high was Q1 of 2016. Now, to be fair, FactSet, who is a source for this data, it only goes back to 2006. So not a huge amount of historical data, but still significant. Now, by sector, here's where it gets interesting. S&P 500 sector level negative EPS guidance Q2 2019 versus 5-year average. The 5-year average is in gray and Q2 2019 in red. And you could see Infotech. Those are your Googles. Look at the chart of Google. We'll go to a chart of Google in a moment. I'll kick off with the chart of Google, which I consider to be uninvestable. And I've been saying that for over a year now. Go back on YouTube, search Google, look at my videos. I've been saying, do not go near this company. They are a DOJ target, and sure enough, they are in big, big trouble. So Infotech, lots of negative guidance. Consumer discretionary, lots of negative guidance. Healthcare, same deal here. Although healthcare is looking strong on a monthly and quarterly basis. The industrials, not so bad. Real estate, no shock there. And think about it. Real estate is flashing negative EPS guidance higher than its 5-year moving average with historically low interest rates. Yet they tell us this is the greatest economy that we've ever seen. Now, consumer staples, they are doing well, and the chart on a quarterly and monthly basis reflects it. Now, take a look at the financials and the energy sector. They have very little, zero, in terms of negative EPS guidance. Where should we be looking to buy? I'm looking at the financials, not so much the energy sector right now, but definitely the financials. perhaps the energy sector, though. Let's get to the charts. Okay, so we'll kick things off with Google, Alphabet, whatever they want to call themselves. This is a chart of Google weekly basis. Last week's price action, we were down nearly 4% on the week. Here's an overlay of the S&P 500 in blue, in line chart, and you can see that Google, one of the most profitable companies in the world, is dramatically underperforming the S&P 500. They have nobody else to blame but their own management. When they first began trading publicly, their motto was do no evil. They removed that motto. They got rid of it. That was their mission statement. Why would you get rid of do no evil as your mission statement? Now you have the Project Veritas video out there completely exposing this company for what it is. Rather than doing what they do really, really well, I mean, hands down, really, really well, they are search geniuses. I use their products for my business. I wouldn't know what to do without them. But this social justice warrior stuff, this is not going to end well for them, especially now that you have Elizabeth Warren, one of the most liberal Marxist people in the world. She's mad at them. And when you have her mad at you, as well as conservatives, you have a big problem. You have a real serious problem. And they are now in the crosshairs of the DOJ. And you do not want to be there. So on a weekly basis, horrible price action. Take a look at how they did. We'll keep the S&P 500 overlaid. On a monthly basis, underperforming the S&P 500 on a weekly basis, daily basis, monthly basis. Let's take a look at a quarterly basis and on a quarterly basis as well. In fact, this company has been unable to put in a new high in a year. 1 year officially on a quarterly basis, Q3, 1 year effective tomorrow. Now, I'll tell you, if we break this support level here, it is all over. And these shares become a short. But as it stands right now, the uptrend is intact, so I don't want to short it just yet unless we get an amazing setup. Let's move on to the stocks that we're watching for the coming week. The first chart up, Kansas City Southern broke out last week. Do you go running in and buying on Monday morning? Maybe. We talked strategy with members on the week ahead commentary, went over how we want to enter these trades. What I'm going to talk about right now is what we're observing, why we're interested. But with members, I'll talk about the strategy of where we want to add more, why we like it, and where we want to stop out. So join up, take advantage of the 14-day free trial offer. And if you join up silver, gold level membership, you get a subscription to TrendSpider for free as well. So weekly chart, Kansas City Southern breakout, and it appears as though we are going higher. What else do we like? Chipotle Mexican Grill. You got to love it. We broke out, monthly chart. The path of least resistance is to the upside here. We have a bull flag set up. We had a nice consolidation for the month of June. We broke out. Stokes, higher lows, and while they have been declining of late, and one could argue they're overbought, they're over 80, gotta sell, they're overbought. That's what technical analysis for dummies tells me, Bob. No. You do not go selling just because you have RSI above 80. They can remain above 80 for a very, very long time, just as they did right back here. Take a look. They were above 80 for 2 years. Look at all these gains you would have missed out on by using that foolish rule of thumb of a stock is overbought when it has RSI and stochastics above 80. Nothing could be further from the truth. It means it has momentum. It means that it has strength. There are buyers. You want to buy the pullback. RSI on CMG monthly basis, rising. Higher lows, higher highs. Exactly what you want to see. If there's a complaint that I would have, volume. Volume could have been better on the breakout. So we'll be looking to buy Chipotle Mexican Grill this month. MDU Resources. We spoke about MDU Resources weeks ago. We're looking for a breakout here above this upper band of resistance. The stochastics are rising. RSI has pulled back on a weekly basis, but that's fine. as long as we continue to put in higher lows and higher highs. The trend is your friend. I may be a contrarian, but that does not mean I ignore a trend. Volume last week was pretty high. Let's take a look at MDU on a monthly basis to get that higher level view, to get a feel for how we closed out the month. This is a pretty setup here. Let's throw some lines up here. I'll be right back. Okay, monthly chart, a very, very tight consolidation here. We are in a triangle formation. We are very close to a breakout. RSI putting in higher lows, no breakout yet. This is why I put this line here. I'll be looking for a breakout on a monthly basis. Stokes, no new high last month, but we're putting in higher lows. That's what we want to see. Higher lows on Stoke RSI. Look at this volume. Really nice volume action and price action for the month of June. Higher lows on Williams percentage R. So MDU looking rock solid on a weekly basis. Not so much. We're looking for a breakout on a weekly basis. Let's go back to that chart for a moment. This is what I call the drill down. Monthly chart looking great. That's the higher level view. Weekly chart, not so great. We retested the support level. We closed down on the week, but still a bullish week. We did not break back down below this key support level. It was a retest. Now what we want to see is a breakout above this upper band of resistance. Next chart up, Perspecta Inc. I love the name. Perspecta. All right, so we broke out on a weekly basis the week of June the 3rd. We consolidated, retested the breakout point. What was resistance is now support. It did it not one time, not two times, but three times. We're looking for a breakout here on Perspecta. Daily chart, a bullish key reversal on Friday. I am slightly concerned about the Stokes, which are declining, but these could really be chalked up to a stock which has had an orderly pullback. I'm not all that concerned, especially after Friday's price action, but we'll keep an eye on it. And if you're wondering why I am concerned about these Stokes, which are declining and now beginning to trade down below the 50 level, rallies tend to fade when you have both lines on Stokes trading down below the 50 level. So it's a cause for concern. So members, more to come. Great volume on Friday. The next chart up, AT&T, monthly chart. A beautiful month for the month of June. It traded up over 9.5%. And I was talking about it back here when it was in this trading range and it was yielding 7%. It's still a big fat yielder, yielding on an annual basis 6%. Nothing to sneeze at. We broke out to a new monthly high, negating the prior month's bearish key reversal. This is a bullish setup here. I mean, I think that we're going a lot higher on AT&T. And remember, if you go back to the beginning of this recording, I showed you a chart of the consumer staple names. And yes, a phone nowadays is considered a staple in my book. They had less warnings for Q2 guidance than the 5-year moving average. So AT&T is more of an investment because I do believe that as we proceed forward and the Federal Reserve begins to cut rates and then eventually goes to QE, you're going to see institutional money rotating into high-yielding stocks. They'll be chasing yield yet again, just as they've been doing with the utilities. And they'll be looking for names like AT&T where you can capture a yield, a 6% yield, plus you have a beautiful chart allowing you to capture upside potential on the underlying asset. What's wrong with that? Right? So AT&T looking rock solid. The next chart up, First Solar, monthly chart. So oil is a beneficiary of all the turmoil over in the Middle East, and that turmoil promises to only get worse. So on a monthly basis, we did a retest of support not once but twice last month, and we held and we broke out to a new monthly high. I think First Solar presses higher. Now we have Stokes, which will be trading up and above the 50 level. RSI, we have a higher low and a higher high on a monthly basis. You have to love it. Volume could have been better. The next chart up, CyberArk, monthly chart. Now notice what we're doing this week, folks. It's a bit of a deviation from what we normally do, where we take a look at the weekly charts. We're taking advantage of the fact that We have the month of June now in the books. I want to get a feel for that really high-level view of how we closed out the month of June, and that'll give us a good feel of where we may be going in the coming month. And this is the value of having that high-level view. We're not day traders here. We're not looking to scalp a dime, scalp a nickel, scalp a quarter. I'm looking to scalp bucks. And you're able to do that by taking a look at the higher level view, entering the trade using core positions, looking out weeks and months, not just days. And you could swing trades around your core positions, which is what we've been doing, and we plan on continuing to do. But CyberArk and the names that I just went over, a couple of them anyway, are names that we're looking at for the longer term. Now, CyberArk last month consolidated. It's digesting gains. This is a consolidation. And you may be sitting there saying, Bob, you have RSI, it's overbought. What are you doing? Stokes are rolling over. What are you doing? It's a strong stock. When you have RSI, which is overbought, it's overbought for a reason. When you have Stokes, which is overbought, it's overbought for a reason. Let's drill down to a weekly chart. Here, take a look at this. These are the charts that I pay attention to. And our strategy is to use a rules-based approach when buying stocks. And the rule is the shares must come to us, meaning they need not necessarily pull back for us to buy the dip. When we're in an environment where we believe that the stock market on a quarterly and monthly basis is in all probability going to break out to new highs, well then, we could buy momentum. Now, on a weekly basis last week, CyberArk pulled back, did a retest of a support level, and it held. It closed back above the 125 level. That's good stuff. Now, where would I get majorly bullish on CyberArk? On a breakout above this upper band of resistance. Folks, join. 14-day free trial offer. Watch my commentary. It's posted in the members area right now. Take a look at our strategy for getting long of all the names that we have discussed. Now, the final chart I'll go over is a request from one of our members. His name is Charlie, very nice guy. He's a brand new member, and he asked me to take a look at Night Food Holdings. This is a daily chart. Let's take a look at the higher level view. It's not a bad setup here, but I will caution it's an OTC stock, and automatically that gets my back up a little bit because all too many times these are pump and dump stocks. But one way that you are able to identify whether or not a stock is a pump and dump stock, and even if it is a pump and dump, who cares, right? I don't care about the logic of as to why the stock is going up. I just care that the stock is going up and the chart pattern is allowing for a continuation breakout. Now, this could be, for all I know, the biggest pump and dump in the history of the world, or it could have the cure for cancer. I have no idea, and nor do I care. It's an OTC stock. There's very limited information on these names, so you must avoid listening to the story and take a look at the chart. And what is this chart telling us? It's looking pretty good. We broke out on a monthly basis last month. Now, what I'd like to see is a pullback and a retest of that breakout point. And then I would look to add on a new breakout to a new higher high. Now, we have a strategy laid out in the members area on the week ahead commentary. It's the last chart on the week ahead commentary that I discussed in great detail. Right now, we're just talking about the monthly chart because I have to hit the pool, man. It is hot out, and we are going to hit the pool and then get that barbecue going. Everybody enjoy the remainder of your weekend. I will begin doing swing trading today, perhaps even on Monday, maybe Tuesday. Everybody have a profitable trading week. And remember, trade the charts, not the story. Be well.